Hey, everybody. Thank you so much for joining us. Welcome to another episode of the Blockchain Banter Alpha Hour series. Thanks, Tyler, for DJing. We have Patrick here, creator of Dynamo DeFi YouTube and newsletter. Looks like Ceazor and Brad weren't able to make it. I know Brad is going to try to join us a little bit later. We also have Will behind the Paper Street Capital account. He is an investor in both TradFi and Web3 and writer of the Substack Not Smart, Just Interested, along with Dr. Mark Richardson, the project lead of Bancor and Carbon DeFi. And Tyler is our resident trader and DeFi farmer. How are you guys?
Good. It's good to be here.
Happy to be here.
Very
Good.
well, thank you, Ben.
Good. Patrick, I was thinking maybe you wouldn't mind starting us off. I noticed that your newsletter is hot off the press of what, 2 hours ago, I think?
Yep. Yeah. So,
I'm
anything
gonna,
in particular?
yeah, I want to pin it. So if anybody hasn't subscribed to your newsletter, definitely recommend it. But maybe we can kind of just go through a couple of things.
Yeah, for sure. So, big news in terms of trends and on-chain stats this week that I focused on was Base. Um, Coinbase's new layer two. For anyone who's not familiar, although many people listening probably are if they've been following crypto. I mean, this thing has just blown up since they officially launched it last week. It's up to around $130 million locked in DeFi, even more than that loaded onto the chain. Number of transactions. They had a few days where they were over 700,000 transactions. And just for comparison, for people who don't normally check these stats, Ethereum usually runs just over 1 million transactions a day. And that 700,000 was actually more than either Arbitrum or Optimism, which were the two leading Ethereum optimistic rollups previously. So, I mean, the traction they've gotten in a week is pretty crazy. I think still waiting to see what will be the blue chips for the ecosystem, but probably some of the fastest adoption that I've seen of any chain in the bear market.
Yeah, I was going to try to compare that to Avalanche, the Avalanche Rush, I think 2021, and Polygon Summer of 2021, also pretty big, but I still don't recall them, garnering nine figures in a week. I think that's pretty unprecedented.
I think the biggest one in terms of like a single day was the at least that I can find is the when what was that app called? It launched on Phantom. There's this lending market that launched on Phantom, and
Oh,
they got like
yeah. Oh, I'm totally blank. I know exactly what you're talking
it's
about, though.
what it's Geist. It was
Yes,
the I was gonna say it was
yes.
the German
It got
version
like
of
$1
it.
billion
Yeah, so
in like 12 hours or something.
yeah, so that was the craziest one I've seen, but that was of course very different environment because it was it was in the midst of Bitcoin making its way back to all-time high already. Things were pretty
I think
bullish.
that token
But in
was
terms
like
of
kind of a trap too, wasn't it? Like everyone was convinced it was like going to blow up because like of course it will. It just got billions of dollars in TVL, but it wasn't actually tied to the tokenomics, I don't think, and the token just like infinitely dumped.
yeah, so it was super inflationary, but it also had this weird thing where you could to get a share of revenue, you had to lock the tokens for something like 6 months, and the rates were so good that a lot of people did that, but it dumped like 99.99% in that time. So everyone who did that lost money.
It'll come back.
I think they shut down.
Oh,
I'm
really?
joking. Okay, never mind. It won't come back.
Which project was this, you guys?
Geist.
Geist.
Yeah,
Okay.
this was a couple years ago, but yeah, as far as this week, Coinbase just the base adoption is crazy, and part of that is driven by this new app, Friend Tech, which some people might have used, which is it's a SocialFi kind of app where you connect your Twitter account. It's only available, as far as I know, on iPhone right now, unless they've since launched a version for Android. And you connect your Twitter account, and then basically it creates a social token that people can buy to. If they own it, they get access to a private chat, but really people are buying it mostly for speculation that it will go up. And that's pretty interesting because that's on base. And if you look at the fees, that's been pulling in top 10 fees most days since it launched out of any protocol. It's pulling in like $130,000 in fees the past 24 hours. And that's kind of interesting because people have talked about social tokens as a concept for a while, and there's definitely people who are not normally into crypto, but who are content creators who are interested in the concept of a social token, but no one's really been able to launch an app that has any staying power yet. So to be determined whether Friends Tech is the one that can do that.
Yeah,
And sorry, it's $70,000 last 24 hours. I misspoke.
that would be interesting too, because like I remember back in the day, BitClout. I don't know if that's I know it's still out there, but it just um it kind of spun off. Like I was on there for a little bit, and it was so much speculation that that's all it became. And so it's really encouraging if they're able to make that business model work of some kind of social aspect there without it getting too lost in the token weeds.
Yeah, it's an interesting concept. I mean, some people have already started to try to give more utility to their tokens by either offering some sort of perks, or I saw one developer was offering access to the beta version of his app for if you bought his token. And I've heard talks of I've heard some talks of some Instagram creators, for lack of better words, Instagrammers who also sell subscription products through a site that some people would consider unsavory, setting up friend tech accounts and then allowing people to get access to a private chat with them if they buy their token, and using that as a way to make money.
So this is where influencers or someone will create their own token with their own tokenomics.
So far, you don't have any control of the tokenomics. You collect to set up the app. You have to connect your Twitter account, and then it makes a token for you. And they have a formula where the price of the token is based on how many shares currently exist. So it starts off, I think, at around 13 cents for the first person who buys it. At least it was initially. And then every person who buys it, or every share that's bought, the price increases. Basically the price increases. So it's 13 cents, then I think it's 50 cents, then it goes up to over $1. And I mean, there's some people whose tokens are worth thousands of dollars at this point.
And it launched when?
Less than a week ago. Let's see, when did it launch?
Did Base only launch a week ago? Why does it seem like so much longer already? Because we're in crypto, is why.
There was an unofficial launch where people found the developer bridge around the 30th of July. And so that wasn't really intended for public to use, but it was intended for developers. But they found it in the base documentation, so people bridged over tens of millions of dollars in a couple days. Basically, everything that was there either rugged or got exploited. And then the official launch happened last week. And then since then, it's really taken off and surpassed what it was at July 30th.
Got it. So remember when we spoke about Unibot, it was maybe, oh, Tyler, you unmuted. Did you want to add
Oh, I
something?
was just gonna say, like, I don't know if anyone on the call remembers BitClout, but like this is basic. Like, Friend Tech is basically like people say copycat. I don't know if it's a direct copycat, but it's similar to BitClout, which was like a big A16Z like project. And yeah, they use this like up only bonding curve, which basically means whoever's like owning the tokens is going to do well, I guess, if it's adopted. But yeah, might have front run you, Jen. I was going to ask Patrick if this gives him like Unibot vibes because I think he was pretty early on that narrative.
So I'm not 100% sold on this as much as I was on Unibot, although I'll say there's a couple of similarities I see that I like. One is that this continuing with the trend of, I guess you could say, simplifying or abstracting away the complexities of doing things on chain. Because when you set this up, it makes a new wallet for you that you then have to transfer funds to, and then you can buy and sell things. I mean, really just with a click, which I guess, or a click and then a confirmation, which I guess is risky, but it's actually even easier than with a credit card. And so I think a lot of these sort of fun applications that people do on chain eventually, I mean, if you have anything that people are making hundreds of transactions a day, they're not going to be clicking on their ledger for every single one, right? That's just not that's not good UI. People aren't going to want to do that, even if it's more secure. So I think that's interesting. Another interesting thing they did with this is it's super tough for crypto apps to get approved in the App Store because you're supposed to give Apple, I think it's 30%. And so what they did there is if you add their website to your homepage, then it looks and feels like you're using an app, but it's not actually going through the App Store. So I think that that's actually something that I could see a lot more crypto projects use. As far as whether this is a true 0 to 1, I mean, we've had BitKill out before, but I think the big question is whether people are able to start building other applications that leverage these social tokens, either for gated access or for more complex trading.
I think that's what I was going to ask also is, you know, Will, I think you mentioned BitCloud also, right? So you both compared it to that and it didn't go anywhere. It wasn't, I mean, it didn't have any longevity, I guess I should say. Do you know what was the reason for that? And are there similarities in that? Was it maybe timing or just overall adoption? What do you see the reason being that that wasn't successful and this might be?
It feels like a first iteration of a new idea, and I gave it a shot. It was a couple years ago, and I think like Balaji Srinivasan had recommended it, and he was an early investor in it. And so I was like, well, let me just check it out. The only user that I found useful in there was Mark Manson, where he was actually posting what you would on Twitter. Virtually everybody else was just like, if you buy my token, you know, I'll repost you 10 times and all this shit. And it was just kind of, it got really annoying really quick. And I mean, my token's on there, but I hadn't been on there in I don't know how long. I think it just, the idea is really interesting. It was like you kind of bet on power users, on like interesting people, but the speculation just kind of front run everything, it seems like. And so it turned into just kind of some wild games, and I'm sure there's some hardcore users on there that really love it. They switched the token to something like DSO and all this, but by that time I was just like, I'm out. This is it just wasn't my cup of tea, and but so I like the idea. I think the execution is difficult because it's hard to get. It's hard not for that speculation to take over.
My question is are we going to see a lot of copycat projects from ETH and other chains, whether L1 or L2, like move to base and instantly see more momentum right away? Like, I guess that's what I'm wondering, like from a value standpoint. Like back in the day, it was like, oh, once if you were listed, if you got on AVAX, you were guaranteed to get some boost in liquidity. I think similarly, like Optimism, Arbitrum, like we're seeing the same thing with those ecosystems. Is like Coinbase and Base going to be like that, just like on crack?
It seems like it right now, right? There was one some NFT mint that sold out 20,000 NFTs in 20 minutes or something today. So
Wow.
I talk to projects I know that are actively talking about, hey, maybe we should like cancel our plans to or delay our plans to deploy on this other chain and deploy on Base first.
Is the value add there just because it's like a degree closer to easy on and off ramps?
I think there's two value adds. First is the degree closer to on and off ramps, and I mean, some people are speculating that Coinbase will build tools where you can just onboard directly to the chain with a credit card. I mean, there are tools you can do that on other chains, but people are speculating Coinbase might build one. And then the second thing is just because so much money has flowed in right now, and there's not really blue chip apps established. I mean, you have Base Swap, but it's been so early that it's probably, its position as the leading app isn't necessarily guaranteed. So you have everyone thinking, okay, well, if $200 million just flowed into the chain and people probably aren't that loyal because they've been on there less than a week, then we could bridge over and we could pretty easily get $1 million, $2 million deposited. Easy is relative, right? I mean, yeah, it still requires work, but that's the thought that I think is going through a lot of people's minds.
Yeah, it's really encouraging to me overall. It's just kind of a you had that wave like you're talking about of speculation before you could bridge out and all those rugs, and I'm sure everyone at Coinbase was just grinding their teeth like, son of a bitch, like we really only don't want this. But maybe that's just kind of how this pattern goes of you start with the kind of very toy speculation phase, and they're just speed running it. Like they just went through that within like 10 days, and then like you said, like maybe some really true utility is getting built, and maybe it's a if you're the first one there to get it up and running, it's kind of a winner take all or winner take most rather. And so I like it. This has a different feel than some other kind of speculative chain. It just feels very kind of feels more solidified, for lack of a better word.
Well, it's like the very first like Fortune 500 company that's like actually owns a chain, right? I mean, I know they're like leveraging optimism, but it's like I remember back in the day, if like Coinbase's like asset library listed your token, you were like, oh man, we're like this is big time. Like like you're not even like listed on their exchange, you were just like on their radar. So like now this is like I think somebody mentioned earlier, like this is pretty much the closest you can be to a Coinbase listing, and it's pretty much permissionless.
Speaking of growth and base, right, Patrick, you also mentioned Solana in your newsletter. Saw a lot of growth this past week, and that was the first call we actually invited you on to join us was about Solana. What's happening over on Solana right now?
Well, they did have an exploit. I think that was actually a couple weeks ago now. So on one of the sort of hyped up new protocols. So that was
That
unfortunate. Cipher, I think was the name of it. But yeah, I mean the past week, interestingly, the growth has been there, both in terms of Sol and USD, which is good because that's the first thing I always check is it just a price increase or is there actually more money flowing into DeFi? But as far as what's going on, I mean, it's just it's kind of across the board where for maybe it's just because people are speculating that that ecosystem is going to take off, but and I think it's partially because of the upcoming Fire Dancer upgrade. It's because there's a lot of interesting decentralized infrastructure stuff happening on the network. Money's just been moving into Solana DeFi recently.
I've been noticing the Solana DeFi narrative now for a minute, and I don't think it's really slowed down very much. The other one that I've noticed more talk of is Mantle. Is anybody here familiar with Mantle?
I'm not now.
Yeah, I'm familiar with Mantle. They've also been growing pretty fast, and
Right.
they were kind of keeping pace with Base, and then over the past few days, Base just overtook them. But Mantle also a new layer two, and for a little bit of context there for people who aren't familiar with it, it's launched by BitDAO. So BitDAO is rebranding to Mantle, and or that was one of their brands, and then they're just folding their entire brand into Mantle now. But one of the things that makes them significant is they have the largest treasury of non-native assets in crypto. So non-native meaning not counting their own tokens. Their treasury is $800 million, and so for context, the Ethereum Foundation's treasury is $590 million, which is the next largest. Um, and in their treasury, if you count their own tokens, the Mantle token, as it's now called, is over $2 billion, which would put them about on par with Uniswap. Or 2 billion. I don't know if I said million or billion, but 2 billion. So yeah, they just have a massive treasury, so tons of firepower to ramp up this chain once they decide to fully start incentivizing people.
Yeah, I'm glad you mentioned that. This was on my radar like months ago because I saw kind of the discrepancy with the treasury and the value of I forget what their token's called. Is it Bit or something like that? Um,
It was Bit, now it's MNT.
okay, got you. Yeah, so that was on my radar. I don't know, like I didn't find any like crazy alpha beyond the fact that, like Patrick said, it just seems like they've got a ton of cash, and I typically don't fade moves like that.
Maybe that kind of is though the alpha. I mean, sometimes when you want to, it's like Patrick, you were saying, you want to kind of wait and see what the blue chips are on base. It's definitely growing so much, right? So when you see like a new chain that is so well funded, I guess, or has such a large treasury and it's yet to really make its bang, you want to kind of keep an eye on the different projects and things that are launching there and what's happening over there in general. But that's definitely one that has been on my radar that I'm seeing more and more of. So I was kind of curious if anybody had really looked into what was going on over there, aside from just, growth, I
Well,
guess.
the advantage they have is like this procedure has been iterated so many times over the last 3 years. Like I think Binance Smart Chain and like, I don't know, EOS were like kind of the new frontier chains. And, they have the privilege to see like, okay, what did Polygon do, right? Like what did Arbitrum do? Like Arbitrum, I would argue, did it one of the best because they didn't just like start with this initial hype. They like built it. They were very deliberate over like years, right? Bootstrapping the ecosystem with devs. Like it's a long process, and I tend to be bearish on the guys and the chains that think they can just come hot out of the gate and sustain that without having a real game plan. So I'm sure if they look at the past, they'll be able to do something pretty good from here on out.
Yeah, sustainability is definitely a key. What about unlocks this week? I noticed that there are a bunch of unlocks. Have you guys looked into those at all? They're so, I find them to be sometimes unpredictable, right? Because sometimes you have this bearish unlock and then sometimes it turns into this bullish unlock. And um, I know that Patrick, you look at a lot of the on-chain data, and Tyler, I know that you're very much into charts and things. I'm kind of curious if you guys have looked into these unlocks that are happening this week and your thoughts on those.
I'm a big fan of the bullish unlocks, but there's like it depends on size. And the sandbox unlock, I think it happened just like a few hours ago. That is just an exceptional amount of value that was just unlocked into the market. And I don't feel like that's a bullish unlock, but yeah, we'll wait and see. That's about the only thing on my radar right now.
I just read that was 81 million in sand. Oh, no, no, no. No, it was 81 million was transferred over into exchanges, I want to say. But I think it was like 16% unlock.
Yeah, like maybe if it were like heavy bull market like 2021, it would be maybe a bullish unlock, but it's I don't know how these order books are going to sustain that.
Wait, the token is sand?
Yeah.
Is that right? Dude, that's a hard thing to like tell your accountant at the end of the year of like, wait, you lost how many millions on what?
Have
And you're
you
like, it's sand.
have you
Like,
seen that are launching, Will, and you're worried about sand? I think
wait,
somebody strategy on carbon recently, and it's funny because we talk about like these things, and Patrick, Tyler and I were talking about Unibot, and before it really became a narrative, we were maybe on a call discussing something and we saw this strategy come in. We're like Unibot, and we were kind of spoke about it a minute, and that was early into this, right? So now we look at these strategies that are coming in, we're like, what is this token? And I've never heard of a lot of them, but it's funny that sand is the one out of all of these, Will, that you point out as being funny. What was the one we just recently saw, Tyler?
Frog Dog.
Frog Dog.
Yeah, no, Carbon
Yeah.
Alerts was like kind of alpha central when it first launched a few months ago because like somebody made a Pepe strategy like when Pepe's market cap was under 50 million. Same with Unibot. Somebody set up a Unibot strategy when Unibot's market cap was well under 5 million. And I remember being like, I checked it out and I still didn't jump on it then, and I'm still kicking myself.
dude, you really might be onto something. Like, I'm subscribed to that alerts channel, and you do see just the weirdest stuff, and then like 30 days later, it all just explodes.
Yeah.
How
So,
how about that Harry Potter Obama
Yeah,
Sonic
big.
Inu?
So like somebody in one of my like price groups, like they pinged like Bitcoin, and it was like the ticker was like all caps, and I'm like, wait a second. I'm like, what is this? And then like, so that was my intro into Harry Potter Sonic Inu 10 coin. And yeah, I just watched it do a 20x since then, and I'm literally like, I hate and I love this market at the same time.
there's your
Yeah, no,
alpha, man.
that's one of those ones I remember a couple people shilling it in the comments on my stuff a month or two ago, and I just completely ignored it, and obviously kicking myself big time now.
It feels like the like me lady like NFTs. Like it's just like anarchy, chaos, and for some reason there's like hundreds of millions of dollars flowing into this project.
Let's fill Brad in. Which project are we talking about? Harry Potter,
Ticker
what is it called?
ticker Bitcoin. Harry Potter Sonic Inu 10 coin.
Brad, we were talking about some, noticing different tokens being launched. Well, not launched. I'm sorry, different strategies being created on Carbon, and how this was kind of like an intro to Unibot for a couple of us, and Pepe even. And it was like all of a sudden they just kind of exploded a little bit.
I wish I had some familiarity with any of those that you have just dropped, and I have zero.
Yeah, they're not blue
Blue
chip.
chips, they're
Yeah.
So, Brad, what have you been noticing in the market this past week?
Oh man, I was afraid you'd ask that question. Um, I haven't been noticing a lot. I've been working on a project, but I did notice. I don't know if you guys already talked about this or not. All of the funds and others jumping in on the Coinbase filing their own briefs in support of them, which I was really glad to see.
I'm sorry, they what? Tell me again.
So a bunch of VCs, A16, and a bunch of other folks in the space all filed briefs in support of Coinbase against the SEC. So a bunch of people jumped in on that. Just really glad to see all of them expending time and legal resources supporting Coinbase's case.
It's definitely great. Coinbase has been, I mean, obviously extremely outspoken and working so hard to like work with the SEC. So it's nice to see everybody kind of supporting them when they're fighting so hard for the industry, and to have like that sort of clear regulation.
Yeah, I'm hoping it'll inspire others to fight back when they are summoned by the SEC, because that's, I mean, one of the greatest weaknesses that we've had in kind of the regulatory fight is it's a lot easier for a project or a company to settle, take the fine, and hopefully have some kind of operation after that. But it doesn't do anything for the entire space. So I'd like to see a lot more people fighting them. I'd like to see a lot more people suing the SEC. I'd love to see the SEC bogged down in a ton of lawsuits because they don't have the resources or the staff, and they've lost all of their experienced legal staff at the SEC. So I'd love to see a denial of service attack via lawsuits on the SEC as well.
Do you think this will? Oh, go ahead, Will. You unmuted. Go ahead.
So I'm reading a book right now called Revolt of the Public. I don't know if anybody's read that. Where the high level view is that the deterioration of a lot of these institutions comes about from how much information is easily available to everybody now. So if you take the SEC 20 years ago, it's like if you got a letter from them, it was like, oh, they know something, and you would immediately get shut down. But when they're picking these fights now, everyone has the same information, and so if it's really fascinating because you watch it on Twitter, the SEC making these arguments, and all of us who are involved in the space, even just even if you're superficially involved, you just know their arguments don't have a ton of weight. So it leads to these fights, and they used to never fight. Now it's like because they're fighting, they're losing. I think I've said this before, um, but it's really interesting to see. I think over time, because especially everything's just on chain and information flows so quickly. I think, and this book was written 10 years ago. It was really prescient. I think he's right. It's just like this is what it looks like when everyone can access information so quickly and so easily, and it spreads so quickly. And it's like, I just don't see how they regain ground after this. It's which is good. It just maybe they were too calcified, and it's basically X number of lawyers instead of innovators. But anyhow, it's fun. It's interesting to watch. It's going to be nasty, but it. I'm just encouraged by everything that's going on in Coinbase, and then, so to Brad's point, it was great to see those filings. I think it was a few days ago, but I mean you had a senator on there. I think Senator Loomis signed on and added to it, so it's pretty wild.
Yeah, it's really great to see the industry saying, you know what, we're going to support this and fight with them. And again, like I said, I'd really like to see more and more folks fighting against the SEC, because ultimately, at the end of the day, um, if everyone fights against them, it makes it a lot harder for them to fight any one fight well. And it also gives us an opportunity for setting precedent and making them a bit weaker in their ability to fight. I think the other interesting thing that's going to come out of this is I can't remember the name of it, but part of the filing by Coinbase and some of the other legal folks that I follow, I have a legal list I created in Twitter that is all the crypto legal people that I follow. And one of the arguments that Coinbase is making and that others have made, and that the current makeup of the Supreme Court probably supports it, is that the regulatory agencies are outside of the boundaries of what Congress has legislated. And Gensler even said before Congress a couple of years ago that he had no authority to regulate crypto and in the SEC, and then he changed his mind on that. So I'm really hopeful that that one point is actually going to lead to something heading to the Supreme Court on that particular argument. We'll see what happens, and I'm not an attorney, but I do really like that argument, and I like the argument that Congress has to legislate what the boundaries are and the definitions are, as opposed to these guys just kind of running amok in the agencies, trying to establish the law and doing enforcement, regulation by enforcement. So, well, we'll see how it all comes out, but I'm feeling fairly optimistic at this point.
You think this will turn into a sort of catalyst for us? Because, Tyler, we were speaking, I don't know if it was last week or maybe the week before, about how we've, normally there's news like we, discussed the PayPal last week, right? Or Ripple, things of that sort that would normally be more of a catalyst. And I think you said, Tyler, and you can mistake me or correct me if I'm mistaken, I think it was like a point zero something, in ETH when this all happened. Do you see this as being a sort of catalyst, kind of everyone coming together and showing this sort of support?
Maybe. I mean, yeah. I mean, the market has been super stubborn lately. I mean, some actually impactful stuff's been happening the past couple weeks, past couple months, but there always seems to be some kind of like bearish argument to counter that. I definitely think it's nice seeing the industry come together. I mean, I know on our coffee talk just last Friday, we were like talking about how the tribalism in this market has always been bad. And stuff like what Brad's talking about really counters that in a very good way. So like for me, it's more of just being a market participant and like being proud of that. Like I think we need to get back into like we're all in this together from the crypto side, because there's just so many entities and people like not just actively rooting for us to fail, but like really trying to make rules to make us fail, which is obviously problematic. And I've seen a lot of like, personal friends that have been kind of bullied in this way. I mean, I know Richie from Bittrex, he just settled, I think with the SEC, was the regulator on them. But he's been trying for 12 years to make Bittrex like, a regulatory kosher exchange. And it's, it's going to take all of us, I think, to really kind of fight these battles publicly.
I want to go ahead, Ceazor. Welcome to the call, by the way. I'm glad
Hey,
you
Ceazor.
make it, both you.
Hey guys, sorry I'm a little bit late. I was just lost track of time and stuff. Yeah, I'm gonna just hop in here and try to see if I'm on the same wavelength. The other day I did a little tweet, and what I had said was the New York Stock Exchange should be rebuilt on chain, and if we had something of that, like maybe not that size, but something of that purpose, of that goal, then the SEC would have something to continue to play with, to continue to regulate, continue to control, and continue to offer that, as they call it, a safe investment venue on chain for its citizens and stuff like that. And then they could leave the rest of the stuff alone, right? So this is kind of what my idea was there, and I don't know. I don't think it would be hard to happen, but I do think, one of the bigger players like Kraken or Binance or something like this could pull that off.
Go ahead, Brad.
Yeah, look, one of the arguments I make all the time is that from a communications and persuasion and argument perspective, that we in the crypto space need to stop falling back to please don't regulate us and to being aggressively offensive in our fight. And what that means to me is demanding and calling for and writing legislation that actually puts our entire finance system on blockchain, right? Because you can make the argument that the 2008 financial crisis never gets as bad as it is if everyone can see everything that's happening on chain. You can make the argument that boiler rooms and Ponzi schemes are able to be seen by the SEC, and the SEC can actually go in and protect people as opposed to finding players in the space after the fact, because everything is transparent on chain. I think if we can start making that argument to Congress and start making that argument to the American people that they deserve that and the elimination that comes with that of middlemen who are taking their money, that we can make a really powerful argument publicly about why this is so important. We've gotten logged into the scams and this label that crypto is filled with these kinds of scams and things. But what the American public doesn't understand is they don't even understand what blockchain is. They don't understand what we're trying to create. They don't understand the mission that we're on. And I think if we refocus our mission to, hey, we want to clean up, we want to make the financial system transparent, we want to eliminate all the middlemen that are stealing your money, and we shift our messaging to that kind of messaging and actually proactively introduce legislation through our friends in Congress, that we may have a much better chance of winning this fight in the public venue and with Congress than if we continue to just kind of like fight the regulatory stuff and ask not to be regulated. That transparency argument, Ceazor, is absolutely spot on. It's I rant about it regularly on Twitter, and I think it's a really important point for us to be making and shifting how we talk about it.
Yeah, I agree with this. What you said about the Ponzi, I think the reason why they, like on chain, you can easily figure out that this is a Ponzi, this is unsafe, this needs to be like not somehow stopped. We need to protect people from getting into that, like sending ETH to Billy, right? Like stuff like that just needs to stop, right? But the anonymity is what creates it difficulty, because they're like, how do we stop the people from getting into a Ponzi when we have no idea who those people are that are creating the Ponzi, and thus cannot stop them from creating Ponzi's? You know what I mean? It's really hard to like, put the bad guys in prison or stop the bad guys in that sense. And I think that's kind of, maybe it needs a shift. Maybe it's like, it doesn't matter if the bad guys will always be there. There's always going to be another bad guy that comes around. So it's better to like just highlight the dangerous places to stay away from. Maybe that could be a better job for the SEC. Instead of trying to put people in prison, just try to, make a map for the people to travel safely through whatever they're traveling through.
What about our actual industry, though? I mean, is that what they want? Because I see a lot of them that are attracted to the Ponzi schemes and to the Ponzi's and everything else, right? So ideally, I think a lot of us would like to see that stop, but at the same time, is that what is that what others actually want? Or, I mean, they're attracted to it for a reason, right? Go ahead, Patrick, you unmuted.
Yeah, I mean, the thing I was going to say is that the thing about permissionless blockchains is that anyone can deploy something on there, right? So if you want to have permissionless blockchains, there's going to be people who deploy Ponzi's on there. There's going to be sketchy players. That doesn't mean that they shouldn't be, punished if they break any laws or steal money, for example. But there's always going to be stuff that not everyone agrees with on chain. But I think the bigger thing is supporting the sort of innovation that actually brings people on chain for the right reasons and for actually making real valuable transactions. And I think in the long run, as the technology improves, that'll outweigh the scams and Ponzi's. But those things will always be there as long as the blockchain's permissionless.
Yeah,
Well, I
and I
agree
think,
with. Oh, sorry.
Go
I
ahead,
agree
Brad.
with it completely. Like I've always said, it's us who are putting our money. It's us who like filled up like FTX with tons of funds. It wasn't, all mercenary. It wasn't all retail like ignorant people, normies who have no idea. It was the majority of the money in there was probably us, in a sense, like the community. So you're right. Like, we have to be a little bit more picky about the Ponzi's that we're accepting as places to put our money, instead of just trying to ride every wave that comes through the system, right?
And I think that there's, look, I think there's an industry solution with regards to this too, as it relates to what we're doing in crypto, and also as it relates to moving finance on chain. And that is, we already have early warning systems in wallets like Ravi that warn you about smart contracts that may be a problematic or could be a problem. But the other factor is that if we just took all of the data of things like when ZachXBT tracks down a wallet because it's associated with another wallet to identify a scam, if we started kind of having a full channel of that, a service that allowed all wallets and all players in the space that provide tools to be alerted to bad actors in the space because of wallet associations or bad smart contracts or weaknesses in contracts or whatever, and we make that part of the interface that the end users see, it can be something that the SEC utilizes. It can be something that average people use, but it can be something that can become part of an industry standard for unifying, kind of helping and warning people in advance about things that they may be putting their money into.
To that end, to like, this may just be how these markets develop. Is you have markets like pink sheets. At the same time, you have NYSE and Nasdaq. Like, and as you're saying that, Brad, I was just thinking like, yeah, there's a good opportunity there where you have somewhat of a kind of a rating agency. You have a bunch of these companies that exist in public markets. Like, this is just may just be that stage where these ideas are brewing and people are working on them, and in 10 years they're going to be ubiquitous, or like you said, there's going to be standards that and maybe it's done by some of the exchanges. I don't know where you would put it in the stack, but uh, this is just like a natural progression where we'll mimic some of the existing market structure that have been around for decades. But I think everyone's probably on the right page. This is just that strange kind of Wild West stage. So, but to Caesar's point, it is just like, even just the individual level of just not participating in whatever wave is coming in. Just like, like, if you want to play that game and you get burned, it's like, it's.
You know what though? How do you? Oh, go ahead, Mark.
Yeah, I think like we spent a lot of time talking about scams, and I think that it might give people the impression that regulators are predominantly focused on or concerned about people losing their money. And I don't want to say that regulators don't really care about you losing your money, because I think they do to a certain extent, but like they're not really like from a regulatory perspective, protecting investors is a very secondary consideration. The most important aspect to crypto regulation in particular is anti-terrorism financing. And I think that this is something that rarely gets spoken about. And it's really that, a lot of these meme coins that get created, especially some of the very, very obscure ones, they are created by if you wanted to transmit millions of dollars to finance, the Taliban, for example, it's very difficult to do that, even if you are, let's say, a Taliban sympathizer. But one of the things you can do, if you tried to do it on a blockchain, you wouldn't necessarily even be able to transmit it that way or send them Bitcoin or Ethereum, because it would be very, very easy for the police to discover that transaction and basically arrest you for espionage. But if the Taliban created a meme coin and created a liquidity pool with it, and then you agreed with them in secret to then buy that token, and then they rug it, and you could be like, oh no, I got rugged, but actually it was an orchestrated attempt to literally send finances, to ongoing war efforts. This is like 99% of the concern with crypto regulation. It really I just wanted to bring this to attention. It really has a lot more to do with proof of funds and where you're sending them. And it's like, we can say, be careful about the waves and things like that. But even if everyone was using those tools, it's still very, very easy for someone to claim that they didn't, they weren't aware, or they forgot to check what Zach XBT was saying about it. And it seems at least believable. It's very difficult to prove that someone had the intent to transmit value that way. And this is a much, much greater concern, and something that's much more difficult to control, even as a community.
Go ahead, Tyler.
Yeah, I was just going to say, to Mark's point, like, that's why one of the earliest narratives in the market that I saw, like, was in 2017, and that was like the privacy coin narrative, which, like, was the only thing that was hot besides the ICO narrative. And I faded that so hard because I was like, I just, like, I know this isn't the ethos of crypto, but, like, I just don't think regulators are going to be chill with coins specifically designed to whatever be 100% anonymous. And same with mixers. Like, I just think narratives like that, just the macro pressures are just bound to crush them.
We have about 10 minutes left. I want to, we were talking about scams and stuff, and it's debatable. Was it a scam? Was it a rug pull? Patrick, you mentioned an exploit earlier. This wasn't necessarily an exploit, but I'm sure everyone was aware of the project that launched on Base, right, by the known developer in the space. Normally, something like that would be considered alpha, right? This developer was known. They launched this project. It wound up turning into a debatable sort of result. How do you guys, are we able to recognize things of that sort prior to them happening? I think, like, you can see which one I'm talking about. Go ahead, Ceazor.
For my benefit, can you just say which one you're talking about? Because
I actually, when I first read Patrick's newsletter, I was like, is he referring to this? Is this being revived? I was confused because I hadn't heard of Friendtech yet, but it was similar to that name, I guess.
MySpace.
Yeah, my feelings. I'm just gonna go through my feelings. I haven't dug deep. I haven't looked at the contracts. I haven't signed up or anything like this. But, like, to me, it sounds like a popularity contest on steroids. Like, are the NFTs not enough already? Like, to fill this need, But I don't know. Maybe there's something I'm completely missing. Like, obviously, there's, like, with everything, there's the potential to make money off of riding the wave and playing the game. But, like, do we really need shares? And, like even me, like, do I need to sell shares of myself? To me, it just sounds so bizarre. So, like, just like popularity contest. Is there something I'm really missing? Like, I haven't read the docs. I haven't done any research. I've just been like a couple tweets here or there.
Okay, so just to clarify, what Ceazor's speaking about right now is Friendtech, which is what we were talking about earlier. I was referring to another project that had launched that is, some claim rugged, some say I didn't technically rug, I pulled liquidity. So I just want to clarify between the two for the listeners. I wasn't insinuating that Friendtech was in any sort of way a rug. I don't know enough about it to have any opinion on that. But go ahead, Patrick, you unmuted.
Oh yeah, I guess we could talk about the project that may or may not have rugged. Just to answer Caesar's question a little, I think one way to think about it is Friendtech, ultimately, if it's successful, and that's huge if, but if it's successful, its target is not necessarily you or me. It's these people who are some sort of Instagram, YouTube influencer who launched an NFT last cycle as a way to make money, but they're not really that deep into crypto. And people like that, the idea that you could have someone can buy a token and they get perks, maybe they get access to this private chat room with you, because right now the main benefit that's built into the app is if you buy the token, you get access to a chat room with the person. There's people who absolutely would like that sort of idea. I think there's already people I know who are professional marketers, professional, online marketers, where they work with other clients who are looking at whether people who have, for example, OnlyFans presence is would be interested in launching tokens on there. So I think the thing is that their target market is probably, if it's successful, not going to be crypto Twitter people. Right now, of course, that's 99% of people who are on the app because they're always going to be the first adopters of crypto. But it takes out the middleman, right? If it's one thing for an influencer to say, okay, I'm launching an NFT or I'm launching some other token, and then it's basically a proxy bet on the influencer themselves. This goes directly to the point, which is you're actually just investing in the influencer themselves or buying access to the influencer without having to mask it under the veneer of a PFP.
My
I get it.
OnlyFans is doing terrible, so maybe I'd go this route.
Yeah, like you can already do this in crypto quite easy with like just like a me bot or like a guild.xyz and a token, right? So you can already do it, but this makes it streamlined. All just point and click, put in your name, boom, everything gets done for you. You pay a little bit of gas probably, and then it's also a single location for you to like be on a leaderboard or something like that for these kinds of things. So I get the benefit of that, but I don't know. It just maybe I'm just too idealistic for like I'm always telling people like, well, why should you pay? Why should people pay for the content and stuff when like they can just invest in the coin, stuff like this, But anyways, I get it. So what was the pool that was, instead of calling it a possible rug, let's just say, okay, somebody pulled liquidity, right?
Yeah, so basically, my understanding is this, and this is based on what the developer said as well as other things that are public. So hopefully I get the details right. Developer without naming is no longer, but was a developer for a top 10 DeFi project and launched a project and then apparently also deposited liquidity with his own money afterwards. And then at some point after the token had gone up, pulled the liquidity that he had put in with his own money, so not with the project money, but it was a large portion of the liquidity at that point. So then he was fired from the project that he was a developer at. But then the question is it a rug if he deposited liquidity into his own project with his own money, but it wasn't technically the project's money? And I think I can really see arguments both ways there.
Yeah, I can argue both ways too. I think it has a lot to do with proportion, like what you said. Like if there was like a TVL of let's just throw a number, 1 million, and he pulled out and 900,000 was his money, maybe he shouldn't have put 900,000 in there. You know what I mean? Like maybe he shouldn't have been 90% of the pool. Maybe he should have been 10%. If he did 10%, 15%, then it doesn't really make the pool so drastically different, right? When he pulls. So I think it's a question of, like just how much effect is that? Like, it's not a bad thing to do as long as you're not having a grand effect on the pool, I would say. That's my opinion.
We've got 3 minutes left. So Mark, let's end this. I want to hear what you have to say first.
Yeah, keep it super short. Which is, the talking points that we've heard already, I think are totally legitimate. But one of the things that I think wasn't mentioned is that it's peculiar to give up on a project after just 4 hours.
100%. I think this is where it comes back. Oh, Ceazor, you want to add one more comment, or are we throwing up a high five?
Yeah, that was a mistake. It was supposed to be 100.
Mark, you just dropped the mic right at the end there.
Yeah,
No,
that was like
true.
so succinct. I thought he was gonna like go off, and he's just like, no, it's weird.
Sus.
Well, thank you guys so much for joining the call today. Brad, Ceazor, I know that you guys weren't able to make it right away, but I'm glad that you were. Patrick, thanks for the newsletter, for sharing that all with us, and for kind of walking through it with us a little bit and discussing it with us. Thank you to all the listeners and our panelists. And hopefully tomorrow you guys can all join. We have another Blockchain Banter. It's our trading crypto with Keith Allen, who is one of the co-founders of Material Indicators and an algo trader, order book analyst. And we have Crypto Corio, who is a data scientist and big narratives trader. Mark, you'll be rejoining us. Tyler, you'll be on there as well. I look forward to that, and hopefully we'll see everybody on there tomorrow.